in partnership with CommSec.
All right, let's go to Tom Piotrowski for a look at the markets today. How are we looking today, Tom?
Pete, sadly, I suppose, in the context of what happened on Wall Street, we're going to see a slightly softer start to trade this morning. The futures are pointing to a loss of 0.1%. And I say that in the context of the record highs that were struck again by the Nasdaq and the broader US market on Friday, with gains of around just under 0.5% for the S&P 500 and a 0.2% gain for the technology benchmark, the Nasdaq. But there's an important qualification to be had within that, Pete, that at the weekend we have seen substantial progress made on trade, a trade deal being struck by the EU, between the EU and the United States, an inclusive 15% tax on imports from Europe into the United States. So that's significant in the context of what had been mooted in recent weeks, and that 15% tax is across the board. So drugs and autos and things like that that had been suggested might be in for more aggressive treatment, that has been scaled back. So that's a good outcome for the markets and indicates substantial progress on a big bone of contention for investors. Now there is talk in early regional trade. There are reports in the South China Morning Post, for example, that the August deadline for a trade deal between the US and China might be kicked forward by a couple of weeks. So a lot of things to digest in terms of what happened on the weekend, but in terms of what's happening this week, Pete, it is an extraordinary moment in time in terms of the corporate earnings, the economic news that will be released. There's a lot of it that could have very important ramifications for the markets. So it's a very busy week, and they will include inflation numbers for our own market on Wednesday. So there's a lot to get through. The Aussie dollar trading at 65.6 US cents, so just pulling back from that 66 US cent mark.